Good morning, YouTube. How is it going? I hope everyone's having a great day and a happy Friday. We're almost at the end of the week. I see that TRADEPRO sign. I don't know if you've seen it before. We got it up pretty big. Anyways, hope everyone's having a good day, good morning, and good almost start to the weekend, depending on if you guys are looking at the markets today or not. But let's go ahead and start this update. Now, in US futures, we saw more of a lackluster session yesterday. If anyone was trading or watching the markets, we had a lot of sideways movement, especially in the S&P 500. The Thursday session was dampened by data showing 1.3 million people filing for unemployment benefits last week, and the S&P 500 futures were slightly up actually this morning from yesterday's snooze fest. NASDAQ, on the other hand, had hit all-time highs day after day. Huge tech index that's been getting pulled up by a lot of these tech stocks has been rallying aggressively over that 11,000 area. And we've seen a lot of weakness in NASDAQ as tech's trying to pull it down. So a little bit of concern in the tech market is helping this NASDAQ drop a little. But we've also seen a lot of earnings come out, and we're going to continue to do so in the next few weeks. Now, on the earnings front, investors watch BlackRock, symbol BLK, this morning to see how the world's largest asset management fared during the latest stages of the COVID pandemic. And a surprise beat in earnings per share and profit due to investors leaning on bonds throughout. We got a $7.85 per share actual beat versus the 6.99 expected. Morgan Stanley also reported a rise in earnings of 45%, and Bank of America brought optimism to the markets, saying that there are early signs of an economic rebound in sight. Although they did also set aside $5.12 billion to cover loan losses. On the other hand, Treasury Secretary Mnuchin and SBA Administrator Jovita Carranza, I'm not sure if I said that right, anyways, are also scheduled to testify at a House Small Business Committee hearing on COVID-related economic assistance programs. In terms of other earnings news, we saw Netflix tumble over 9% after hours on Thursday, wiping out nearly all the gains from last month. After earnings fell below a lofty profit consensus and weak guidance was given for Q3, while the streamers logged another 10.1 million new paid subscribers last quarter, it sees growth slowing as consumers get through the initial shock of the COVID and social restrictions, because we did see that pop in Netflix due to everyone just being at home. Let's see. For everyone that's asking, George is okay. He has been taking a bit of time off. Everything's good. He'll be back ideally next week if you guys miss his face and are getting tired of mine. So we'll be doing that switch and transition. But going back to Netflix earnings, we're also seeing big changes in the C-suite. So CEO who led the original content efforts, Ted Sarandos, was named co-CEO along with founder Reed Hastings, while Chief Product Officer Greg Peters added COO to his title. Looking ahead, some are asking how much new content Netflix will be able to upload during this COVID-19 pandemic. I don't know if you guys anyone's watching, but Studio Ghibli, a huge anime studio from Japan, recently uploaded a lot of films, which is a great content boost for a lot of people in the world. But will they be able to continue to ramp up the content? And whether the resumption of professional sports will eat into this market share. So naturally, we've seen a lot of sports come back, especially soccer all over the world. We're getting basketball coming back. And will that eat up at this Netflix watching? So that's going to be interesting to see in Q3. Netflix on the brink here had a nice little rally, but now we're pulling back a decent amount. Crunch talks on COVID funding. So leaders across the European Union are gathering in person this morning for the first time since the start of the lockdown. So they're trying to hash out a deal and come together over a 750 billion euro recovery fund needed to lift the bloc out of recession. So in this current form, the plan brings the EU close to a fiscal union by introducing shared debt liability and mostly grants rather than loans. Throughout it has faced some blowback from the Frugal Four, which include Holland or Netherlands, Denmark, Austria, and Sweden. So while the proposal helped beef up confidence in the region since May, boosting Italian government bonds, the euro, and region stocks, any changes or deviations could actually put that at a downside risk. So they're just coming in to collaborate, trying to get this thing settled in tougher times for the first time meeting in person. And then when we transition more to the US, we can see that there is a lot of increased pressure for another stimulus package for the economy in the US, with previous measures due to run out in the coming weeks. So the Trump administration has said it wants another package not exceeding $1 trillion to be agreed before lawmakers go on summer recess in August. So there was a further complication added to the process yesterday when the White House signaled that President Trump could reject the new aid bill if it does not include a payroll tax cut. So that's going to be one of the key measures in this. The need for more fiscal measures remains clear, with the economic damage from pandemic laid bare in studies that show that consumers are not returning to their old spending habits just yet, but there's a lot of savings. And remember, we talked about this last time or a few times ago when we were saying that consumer spending is expected to ramp up in 2021. My camera messed up, damn. I don't know, there's a big light behind me, maybe like this. Is that better? Sorry. So we talked about how consumer spending habits were really dying out, and we've seen an increase in savings. So consumer savings, which could come back in 2021. So most currently, we'll probably not see too much consumer spending coming in throughout the rest of this year, maybe around the holiday season, but 2021 is expected to be a big year on all fronts. So we'll see how that pans out. The EU is also set to pick the next tech battle. So the European Commission is seeking information from 400 companies to establish whether top voice assistants create market problems and an antitrust investigation. So Apple's Siri, Amazon's Alexa, and Google's Assistant are at the center of it all. So European Competition Commissioner Margaret Vestager declared, saying the large amount of user data involved could be used to hurt competition and small rivals. So violators of the EU antitrust rules can be fined up to 10% of their global turnover. We talked about this yesterday, where there are a lot of tech companies that are also under fire for leaking European information over the border. And now we've seen that the EU is starting to continue to crack down on a lot of these tech giants, which could help actually the NASDAQ start pulling lower if a lot of these tech companies get hit by some of these investigations. Now, the last thing we want to talk about here before we take a look at some of these markets and jump into the room is Boeing. So it is unlikely our magnificent queen of the skies will ever operate commercial services for British Airways again due to the downturn in travel caused by COVID-19 pandemic. A British Airways spokesman told BBC recently. So the UK carrier was the world's largest operator of the jumbo jet with 31 planes, or about 10% of its total fleet. Boeing and its suppliers recently signaled the end of production line for the 747 when they set the final numbers of parts needed for the program. So the last 747-8 will roll out of Boeing's Seattle factory in about 2 years. We may not see that again. So Boeing, again, pretty resilient company, but teetering on the edge with a lot of this news, especially with this pandemic. No one's flying anymore. I know a lot of airways are in trouble as well, but we got to take a look at what's going on with these markets. We had a pretty dull day yesterday. I'm just looking up because I got multiple screens. I'm trying to see what's going on here. Take a look. So I just want to see these markets, but let's see, the S&P 500, we managed to break out of the range with slight higher lows, higher highs here. Yesterday's range was kind of a pain, very choppy session, maybe not the best for traders. In today's session, we're seeing a little more upside. We're about 15 points away from that high at 32.30, and we're probably going to see a little push into that into the close of the week. try and build some more of this optimism into this market. I see a huge bearish transition that could potentially fill the gap if we drop under that 3190 on the S&P 500 futures. NASDAQ, on the other hand, holding up a lot of its gains, pushing up, well, not a lot of its gains, but pushing back up, trying to break through resistance. It's holding gains early this morning as it bounced off that 10,520 level. So pretty big level on NASDAQ. We're at that 5-digit mark very clearly here. And we've got key resistance coming up at that 10,670. So through that area, we're going to see a lot of push to the upside, and the bulls are going to take over on NASDAQ. So that's something that we want to watch. Having said that, guys, I hope everyone enjoyed this. Yeah, Forex Black Box was bad day trading yesterday. It wasn't the best, honestly. We had to play the range. The range wasn't that kind to us. We got out slightly decent. You know, the room did pretty well. Try to keep everyone out of trouble. And we're going to jump into the room right now. So thank you, everyone, for joining us. George's probably going to be back next week for everyone that's wondering. Until then, you're going to have to look at me. And I hope everyone had a good day yesterday, or a decent day yesterday, but we're going to have a better day today. So sending you guys all positive vibes. Have a happy trading day. Let's end the week off good, and we'll see everyone in the room. Take care, guys.